Welcome to thestockminer.com here in the beautiful Black Hills of South Dakota. I'm your stockminer, Brian Johnson. And we finished the week on more of a, well, I want to say a bullish note. Gotta give the credit where credit's due. They managed to keep it up just a little bit today. Now, there was a larger, there's a little underlying theme going on here, though. You can see where we got the move up today, but where did it go? It really gapped up right into overhead resistance, and from that point, it couldn't really gain any ground. Now, overall, the internals looked fine from the bull side. I'm not convinced that this isn't just maybe a correction at this point. But we can see here that the gap up happened right into this 11.9-ish area, where then it kind of bled down all day long. So while the markets did finish up for the day, they really kind of moved down most of the day. So something that to definitely keep in mind as we enter, next week's trading. But overall, what we saw was some very strong volatility all week long. Welcome to options expiration week. For those of you that haven't been with me that long, you know that I like to keep my position sizes small. Once again, I'm going to repeat it. I don't mind so much holding Monday into Tuesday, but from that point forward, I always get a little bit sketchy on what to do into the rest of the week, because you can wake up to a brand new market every single day. If you were long into the end of the week, you did just fine, but you woke up to gaps. It was a gap up both days. Today, in particular, same type of a story, another gap up to start the day, but then bled downwards all day long. So volatility overall for the week did not fail to follow through on what is normally a typical options expiration week. See a lot of volatility. So keep my position sizes small, kind of back things off a little bit, get a little bit cautious with that money side of things, because this type of stuff is very, very obvious. Now, as you can see, what are people going to be talking about all weekend long? This inverse head and shoulders. I'm sure you'll see, not everybody will catch this maybe, but I would assume that a lot of people will try to point a lot of attention towards this inverse head and shoulders, and I definitely think we need to be watching it coming into next week. Point being, we went right up into it today, bled out most of the day, if not all the day. So by the end of the week, what did we end up with? Well, 1, 2, 3, 4, 5. You go back in time, and you'll see we started here, we ended down here. So the bears did their job. They got down a little ways before it was all over with, starting at about 12,000, ending at about 11.9. But a 100-point move overall, 150-point move overall. Yeah, I mean, if you're bearish, you certainly wanted to see the bears get more out of the week than what we did see. What we did into the end of the week was bounce hard up into these upper levels, which we saw very, very conclusively on the 60-minute charts. A little bit harder to see them here on the dailies, but the 60-minute are very, very clear in where we kind of went to that overhead resistance area and then stop, building that what could be now an inverse head and shoulders on the 60-minute. However, for the week, not too bad. 3 strong days down, followed by 2 strong days up, giving you opportunities to trade a little bit, but mostly, this was one of those situations where it was kind of better to be a swing trader from the standpoint of the gaps. You would have been able to catch the gaps every day. It's always hard to know what's going to be the right or wrong call in that case, but if you were holding overnight, you did pretty well because you caught those gaps. Otherwise, it's very difficult. You woke up to a large gap one way or the other, and then wondered, where do I go from here? Some of these moves to the downside were a little nicer. They gave us opportunities to sneak our way in, make some profits on the week. If you guys have been following along, we definitely had some opportunities to make money. I hope you guys were in on some of that. But at the end of the week, you can see the Dow was down ever so slightly. The NASDAQ, a little bit weaker now than the rest of them. Here, if we just go on to the daily, you can see how we just bounced around here. And this happened on a very, very quick move. Monday, we had a little bit of movement here, and then a very decisive gap down, run up, then move down. Then we've been chopping sideways. So overall, if you want to take the week in a context here, the NAS was really kind of sideways, wandering around right around this 2250-ish area. This will act as our new little channel to be watching. Overall bigger, I like the 2180 to 2280. It's obviously, quite a bit of room there. It's 100 points. But you can see that we got stuck right in the middle of it all week long. Gonna have a resolve to that. And I think that's going to come next week. We'll see that break one way or the other next week. And you should be ready for it one way or the other. I like the fact that the NAS didn't necessarily go anywhere. This gives us opportunities to kind of plan our trade coming into next week. And from a weekly look, we never made it back to recapture any of these upper areas here in the NAS. Still showing quite a bit of weakness, down 3.5% basically for the week. And that all came from that sideways choppy action. If you were playing the NASDAQ, whether it be Apple or any of the others, there just sometimes wasn't a lot of movement. If you're a Qs player, you probably didn't get a whole lot done this week just because of the sideways action that we saw. And here ending below, closing below the 20-week moving average. That could have some serious implications going forward. SPX 60 minute still stuck in this, came all the way down to the 1250 area, 4550 area, saw the bounce coming up into a very nice, could be an ABC, don't know yet. This could turn into one of a million different formations. The point is, we're kind of seeing that same, go figure, inverse head and shoulders as we are in some of the other indices. So right here above that 1290-ish area could be verification of that particular head and shoulders, inverse head and shoulders. If that's the case, then we could see some more bullishness definitely coming into next week. What we want to watch, though, is we got that gap up and we bled out all day long. So for the week, let's just recap what we saw, and that was a move down below the 50 into these lower levels, only to come back up a little bit by the end of the week. Not a bad move, but 15, 20 points maybe by the end of the week on the move to the downside. You can see this 50. Remember I talked about the 20 ad nauseum, and then we moved to the 50. That was my next huge level to take and hold, and we did see that work out very nicely once we got some closes below, and more importantly, that break that we saw below the 50. A lot of volatility, moves down, move up. This one was a move all the way down, but it landed right on support before the bounce up at the end of the week. Overall, though, the Bears did pretty well. They did pretty well. They finally got to drag this thing down. You go back in time, and it's hard to find a push like this back in time by the Bears until you get like into middle of last year or so, when we kind of had that much larger pullback. So the Bears getting the job done. They didn't do too bad and haven't done that bad over the last few weeks. They've got to continue it now. This is very, very important. This bounce, guys, is extremely important to both the Bulls and the Bears. This is an extremely important bounce that we're about to see right here. And certainly something I'll be talking about probably coming into next week. But from a daily here on the VIX, something else to note, that we're back down. Now, yes, the VIX was down. Yes, the markets was up. Yeah, confirming. What am I still looking at, guys? Same thing I've been talking about. It's holding tight. Look at how it's holding to these upper levels. Boy, I'll tell you what, I do not mind this at all. This doesn't bother me in the least bit that it was down for the day. And even, let's just skip ahead and go that we were down for the day, but not down for the week. The fear is still there, and I'm not convinced this VIX is done spiking quite yet. If that's the case, absolutely should lead to more bearishness in the market as this fear starts to spike and get higher and higher. Now we're looking for closes above the 200 when we were looking for closes back here below the 20 just not more than a few weeks ago. We're starting to see that fear creep its way slowly into the market. And I love how the VIX shows us this. You don't see this in a regular chart. You have to look to some of these odd charts to really get a better feel for this. But I like what we're doing. As long as we can stay above this 1920-ish area, I really like what I'm seeing here from a bear side within the VIX itself. Okay, Apple was down about $4 today. You can see it bleeding itself out. It did not necessarily follow what the NAS was doing. The NAS 100 was up. The NASDAQ composite itself was up. And Apple was down. That's not good necessarily from a strength standpoint. I told you guys about these uppers and lower levels to watch. Never really got a break of one or the other, but it was very important that we hold this upper area. So getting back above here is still the more important area, and that is above that 337 to 340-ish area. You need to watch that very, very closely coming into next week if the Bulls are going to make this into any kind of a further run to the upside for Apple. Everything's still on the table. I'm telling you, going into the weekend, now we're in a period, as I said, where it's going to be, this bounce is extremely important to, I think, the next overall direction in the market. If not for the first few days, but for the next few weeks, quite honestly, and maybe even all the way through summer. That's how important I think this next move is. We definitely want to be watching that very closely. I think that will have an effect on not some, but most all of the stocks as we head into the summertime. Weekly perspective, this is not what the bulls wanted to do. They did not want to lose this 20-week moving average. Now I'm going to give them time. Of course, I always do. Give them a week to kind of recover and get themselves back up. They're certainly in a position where they can recover. They're not that far, a couple bucks. But that's why this overhead area is so very important for them to take back if you are bullish on Apple. You want to be very careful now that we've seen some closes below these areas here. FAS, same type of a thing. We saw a gap up today by the financials. They really helped things along today. But by the end of it, while we did get a push above 29, look where we ended up. Right back below 29. So if you took a trade up and over 29, good. Hope you got some profits out of it by the end of the week. It's anyone's guess where this will go next week, but you're definitely now looking for pushes above 29 and then above really 31 for me, I think, in the bigger standpoint. And from FAZ standpoint, we saw the gap down. Messing around with some of these lower levels here. Just flipping to the daily, make it real quick. This is what we wanted to hold. We came back into the moving averages, which held, and that was good. But man, we are right back on in, below, close to this blue line. This is an area that you absolutely, if you're bullish on FAZ, want to see hold. Breaks back below 40, especially closes back below that area, would not necessarily be good for FAZ right now. You want to see this thing continue to push itself higher. Overall for the week, yeah, not bad, but kind of ended where we started type of a thing. We had good pushes up and above. Bulls had opportunities and just could not hold it by the end of the week. So we'll see if this resolves itself next week. I really do think it will. We'll be watching this closely. There were opportunities to make a little bit of money off of these if you had followed along. And we'll give you some new levels this weekend as to what to look for coming into this next week. Next couple weeks, I think, are going to be important to the potential direction for what could be the entire summer. All right, guys, stick with me. See you guys again on Sunday. Have had some people state that they post the link on certain forums. Thank you guys. Really, I really do appreciate it. I don't mind doing the videos. It gives me a chance to really kind of talk things out in my own mind. But if the videos can help other people, great. It's kind of what I'm here for. If they can look at the educational videos that I have on the site as well, and that helps them better understand what I'm talking about when I say moving averages and 50 and 20 and lines and blah, blah, blah. Good. That's where we want to get people. We want to get people knowledgeable. As my motto says, man, profits through strong foundations. You got to get a strong foundation below you before you can really start to build those consistent profits that everyone's looking for in the markets. All right, we'll be back with you again on Sunday. And we'll talk a little bit more about what to look for then coming into the new week, especially when it comes to the financials and, of course, Apple, as we do every week. See you then. Bye.